Ninja here. Hope you're doing great. Got a great story. It is about rising the additional availability of rentals hitting the market are going to bring down home prices. I'm going to explain this. It's actually a really neat phenomenon. And what people do not tell you, what most people do not understand, is that multifamily permits have been exploding for the last 4 to 5 years. Actually, compared to the run up to 2008, it is way bigger. There are so many more apartment buildings that have been built, and especially in the last 10 years, but really in the last 4 to 5, maybe 6 years, around the country, so many apartment buildings have been built. They don't tell you that. They say there's a housing crisis. There's less single-family homes available for purchase around the country just due to investors jumping in. You're about to see a bunch of those investors flushed out during this next real estate crash. But this story tells a lot. Now, there's 2 stories I want to read you, but the first one is about this. It's out of Yahoo Finance. It's entitled, and actually Business Insider started this story. It's entitled, Home Prices Will Weaken as Rising Rental Supply Creates More Competition in the Housing Market, a top economist says. Growing rental inventory is bringing down rent prices, which should help weaken home prices too. This comes from Moody's Analytics chief economist Mark Zandi. He told CNBC on Monday, the trend is especially evident among high-end properties where the rise of multifamily towers in urban centers has lowered rents and impacted the single-family housing market. Now, another thing I want to add, which I don't know if he's going to cover it in the story, rent prices are falling because there's more available rentals out on the market. We get that. But also, when rents drop below that key threshold of what's cheaper to do, live in a home that you're paying for or rent, more people are choosing rent. So what you're going to have is this sloshing effect. And this is actually a really interesting phenomenon. It takes about a year, really, when the masses start pushing in for it to complete. Homeowners are sitting here that have owned a home in the recent years. They bought a home, let's say 3 years ago. They've seen great price appreciation because of rising costs, rising interest rates, and low inventory of homes. They sit there and they go, look, I'm looking at rentals and we could actually rent a place that's really nice for less money. And we've got all this money saved right now. Let's sell the house. So they throw it on the market. Well, at the same time they're doing this, that they're coming up with this great idea, good news. Thousands of other people have come up with the exact same news or information, this idea, and they start putting their homes on the market and inventory increases. We're seeing a lot of inventory hitting the markets all of a sudden. Then they start moving into these rentals, right? Now, this hasn't fully manifested yet. You're going to see this in 2024, where all of a sudden they start packing these rentals. We start seeing longer days on market, even longer than we've seen now on the real estate market, because inventory is exploding. It's going a lot higher. Then what you're going to see is those rentals start getting sucked up. And rentals that have been sitting on the market for 30, 60 days are now, they're gone in a week, 2 weeks. It'll be easy for us to talk about this on the channel later in the year when it happens in 2024. And then what happens, you have this shakeout, this change, where all of a sudden rents start getting more expensive. You see, the reason why rents got expensive during the pandemic is because people moved out of the urban areas into these all over the country, actually, and they sucked up all the available rentals. And that's when rents exploded higher, right? It's all supply and demand. It's super simple, but what most people don't realize is that time lag. It takes a lot of time for a lot of people to move from homes into rentals, and choosing rentals over owning a home. And then the inventory explodes, and it takes time for people that are even people in the know. It takes months for you to figure out this data, because the data comes out in the future. It's talking about the past, 1 month earlier, and then you got seasonality adjustments. Then you're talking about 3 months prior. That kind of data can take some time. So he goes on to say, this is Mark Zandi, says, I think that is a sign that we will see the weakness in prices kind of broaden out here. That's because the added supply increases overall competition in the housing market, as sellers of existing homes will be under more pressure to cut prices, he explained. He added that renting a single-family home offers the same kind of lifestyle as buying one would. National rental prices are cooling, and they're set to level off further as residential construction has rapidly picked up this year, boosting multifamily completions to their highest levels in the first two quarters since the 1980s. So they don't tell you that on the news. They say we're in a housing shortage, right? Let me show you something else that's really amazing. I gotta do a lesson for my course on this, but during these cycles when everybody is flooding into homes, all those multifamily buildings that were built as rentals that were, you know, developed by large funds, they get this idea, and they've already set it up in the permitting process with most of these buildings, that they can separate these buildings out and sell them off as condominiums. But when rents are really strong, what they do is they hold on to these for price appreciation. They rent them out for cash flow. And as that price appreciates, what they do is they start to divide these properties up, these 100-plex condominium buildings or apartments, and they start to sell them off. I have seen apartment complexes sell off in the late 90s after the run-up of the 94 recession and the run-up in the 90s. Apartment complexes that were just one bedroom, one baths, or two and ones with no, you know, upstairs, downstairs, not full upstairs, downstairs units, but like apartments on the bottom, apartments on the top, no garages. They would go down to the city and say, hey, city, you're having a housing shortage right now. Why don't we go ahead and split these units off and offer them for sale so we could have home ownership, and then that area of town's taken care of a little better. And so these cities allow these to be split off and they sell them off. And that is like, it turns into a big dump of properties on the market. And what people don't realize, it all happens at once, because a bunch of people get the same idea at the same time. And then once you see it in the news, a bunch of other people get an idea and go, oh, I'm going to do it too. Try and, you know, race to the exit first. So it says, the rush here, we're talking about multifamily properties, the rush to add inventory comes as the housing market faces a broad supply crunch made worse by homeowners' resistance to sell their properties because they can't afford to sell them. They cannot afford to sell them and live somewhere else, buy another place. But here is the key. As rents are falling across the country, which means there's more rentals available than people wanting to rent them, these homeowners that are finding themselves, like I said, with all this money, they're going to go, you know what? We could cash out right now. I'm starting to see the light at the end of the tunnel. We're going to go rent one of these homes. It's a very easy move, and what is going to be very predictable in 2024, I believe. But owners will eventually have to come back to the market, Zandy says. I think at some point they're going to need to sell their home due to life events, divorce, deaths, children's, job changes, layoffs. And when they do, I added that, when they do, they're going to have to cut price because they're going to get a lot more competition from other housing sources. This is exactly what we've been talking about on this channel for quite some time. At 6%, he says, he's talking about mortgage rates, I think things come back to life, but I don't think we get home sales back to anywhere close to where they were, you know, pre all of this, until we get back down to closer to 5%. Well, he goes on, and Mark Zandi does another story in Fortune, and it says higher for longer. Is hitting mortgage rates, Mark Zandi says they'll be around 6% for the long term. Anyone eyeing mortgage rates which reach above 8% in October can be excused for longing for the pandemic lows of the sub 3% mortgage, but it's unlikely those rock bottom rates will return anytime soon, according to Mark Zandi, chief economist at Moody Analytics. Everybody should get used to 5.5 or 5.5 to 6%, because that's where mortgage rates are going to settle in the long run. Let me explain something really carefully. When rates went up over the last couple of years, mortgage rates were a mere 4.5% in May, and they topped out at 8%, about 3 weeks ago? Okay. Even if they settle down to 6, we're still going to see a housing crisis, because the exact same thing happened in 2006, 2007. Rates went up, they started to dip a little bit, and it was too late. It was too much. The psychological damage to the buyers was happening. People were selling homes, buyers stopped buying, and then everything started falling off a cliff. And it just becomes this snowball going down the hill, and nobody wants to get in front of the snowball. And that's where you know you're in that sweet spot. And that's when that happens, coupled with a stock market crisis like we had in 2007, 2008, what you're going to see is the Fed then starting to retreat with their rates. The only problem with this is Back then, we did not have the world walking away from the dollar system. Saudi Arabia just announced $0 sales for gold, oil the other day. This is not a joke. The problems we have with nobody from other countries wanting to buy our bonds now, they're not showing up to the bond auctions. This is actually catastrophic. If you want doom and gloom, this is what it feels like. But the only reason you're not experiencing doom and gloom and all your friends and neighbors going, oh my gosh, everything's collapsing, it's because they don't have any clue and they're called sheeple. That's all it is. It's just a time delay. Now we just have to wait for the really bad data, and the truth that you're going to see is the layoffs that companies are going to be hitting everybody with after the first of the year when they find out, oh, Black Friday didn't save us. Oh, crap, we're screwed. And so then for the next 2 quarters in 2024, you're going to have straight up chaos. So that's exactly what's happening. If it's doom or gloom, I just hate to tell you that it's called the truth and how cycles work and markets work. But if you understand what I'm saying and you're getting ready for it, then you're absolutely going to dominate and crush it. So hope you got something out of this. Thank you so much for watching. The Real Estate Ninja is out.